morning to everybody. It's indeed a privilege and a pleasure to have with us Mr. Sridhar today. Mr. Sridhar is former CMD of Central Bank of India, National Housing Bank, was also heading Exim Bank and has an illustrious 38 years of banking career. We are here at the Symbiosis College of Management and Human Resources Development in Ajwani and would like him to share a few thoughts with us. Good morning, sir. Just would like to open with a kind of a reflective question about the last maybe 3 to 4 years that have transpired. We had the subprime crisis followed by our own Indian microfinance crisis. And so where do you see the banking sector headed in, say, the next couple of years?
First of all, I want to thank you and Professor Subramanian for again inviting me to SCMHRD. It's always one feels rejuvenated when you talk to young people. Your question is a very valid question in the current environment, but I am optimistic because I believe that booms and busts are part of economic life today. And you recall that just till about a year back, we were having an unprecedented growth rate, and we were in fact being predicted that we may even reach double-digit growth. We were almost touched 9%. And in fact, some parts of India, some states of India have already reached double-digit growth. Now what has happened, the deceleration growth that has happened this year, that is 2011-12, is partly a reflection of the global economic conditions. As you're aware that in 2009 we've had the Eurozone crisis. US is just about recovering. Japan is also stagnant, and even China has slowed down from its double-digit growth. So you have an environment in which most of the countries in the world are barely able to grow at about 5% or so or even less. And large economic players like countries in Europe, including UK, and the US, which is of course constitutes about 25% of the world economy, is still not, I would say, in the safe zone as yet. Therefore, some deceleration in growth is to be expected. Although in India, traditionally and more particularly in the last 3-4 years, growth in India has been driven by domestic market and not so much by international market. Although the openness of the Indian economy has substantially improved, exports and imports, foreign trade as a percentage of GDP is now over 30%. Even so, the domestic market remains a major growth driver in our country, and that will be so for some time to come. In view of that, and in view of certain other drivers of economic growth that we are seeing, the urbanization that's happening in India, the huge talent base that we have, and what I call is the young workforce that we are able to have, whom we need to skill appropriately so that we are able to take full advantage of their energy, their enthusiasm, and talent. And overall, the institutional infrastructure that we have created across sectors, whether it is in the financial sector, whether it is in the education sector, whether it is in the industrial sector, and even in the agriculture sector, although it is not performed that well, even there we have reasonably good institutional structure. Yes, there are many problems. Some of these issues, there are issues in different sectors. In the agriculture sector, for instance, where we have about 60% of our population, they are still not able to contribute the way they should. And there are policy handicaps, there are probably reforms that need to be done. But these are all always will happen. So my own feeling is that 2011-12 is the hump. If we get over this, 12-13 onwards, there will be a slight growth, and after that I think we should be able to. And as the world economy also recovers, we will be able to see that impact, and we will be able to, hopefully, in the next 4-5 years, at least I am very optimistic.
Taking subprime mortgage crisis ahead, we would like to know from you what kind of changes have been incorporated in the banking practices in India, which is enabling us to, manage risks better and exposure better.
Very good question. In fact, as you know, India was not affected by the subprime mortgage crisis because I think even before the mortgage crisis took place, when we see the build-up of the crisis, our policymakers and the regulator, particularly RBI, was wise enough to see some of these trends and could start taking steps in order that we are able to get out of it. One of the first things I think important measure the nation was taken was that the banking system will not finance the purchase of land. As you know, in real estate or anything, the cost of land is the largest component, it's about 62, 70, 75%. And it is land that appreciates in value, not so much the construction part of it. Of course, construction costs also go up, and it happened. But in the US, the problem was that there was an asset bubble, housing prices having going up, which gave an illusion that banks and there's a little more complicated system there. It's not like in India where just banks just give loans to people. There you have a number of other intermediaries, and there's a concept of securitization. And after giving loan, person so it's originate and distribute model as it was. So because of that, there was no contact between the original lender and the borrower. Somebody else was holding it, it was securitized, and it was somebody else was holding that loan from the security. So in India, and because of the fact that the value of the collateral went up, that gave a false sense of comfort to lenders, and when the value actually fell and defaults started happening, the whole thing went into a downward spiral, which could not be defended. And because the loan was not in the books of banks, it was held by various intermediaries, including Harvard University, for instance, which had invested, and they had to take the loss, huge loss had to be taken by everybody. So the housing crisis became an economic and a financial crisis covering everybody in the world who had invested in this. India, that type of securitization was not prevalent. And well before the crisis, in 2006, very strict guidelines were put whereby securitization as an activity is something that can be encouraged because it ensures more money coming into a particular sector, whether it's housing or some other asset. So because people not connected with, let's say if it is a housing sector, only banks and housing finance companies lend for housing. But through the securitization route, an insurance company which will never give a loan or any other pension fund can actually, its funds can be used for housing, which is a good thing. So that way, that transformation that happens is something good. But if it is misused as it happened in the US, then that is bad. And that is what the RBI issued guidelines whereby that type of misuse can be prevented. Secondly, as I said, they also banned the use of land as a collateral, not as a collateral, as for purchase of land. So if some developer wants to, he has to put his own money and buy the land. And the third that they did was, they also said that even loans that we give for real estate companies, the capital that they have to earmark for that loan was called risk weightage on that was increased, almost doubled. Therefore, more capital had to be earmarked. So it made the loans in effect more costlier. They also put some cap ceilings, that is, each board of a bank had to itself fix how much maximum it can lend to. So in a way, it choked the funds that is flowing. People who have equity funds, of course, can come because then it is their own risk. But then the banking sector, which basically its funds are coming from depositors, like you and me, our funds were safe. And then they put also that they put certain ratios also, like what's called margin money that you give for taking a housing loan, that was increased. And if some bank wanted to give 90% loan, so if we give a margin of 10% for instance, then they have to provide more capital. So they use this capital and the provisioning that they have to do, or they use an interesting thing called dynamic provisioning. Depending upon the contours of the case, more provisioning is to be done. So they made it on the whole not very profitable for a bank. So I think these measures have served us well.